Mutual funds have come a long way in India. In 2023, the total SIP inflow stood at over 1.8 lakh crore and the number of mutual fund folios crossed 16 crore 48 lakh 90,272. The growth of mutual funds in India reflects the nation's economic growth. Today, we'll look back at the history of mutual funds in India. The inception of mutual fund in India traces back to the founding of the Unit Trust of India in 1963. The Unit Trust of India emerged as India's first mutual fund, supported by the Government of India and Reserve Bank of India. The journey can be divided into 5 phases. Phase 1, 1964 to 1987. From 1964 to 1987 marked the first phase of India's mutual fund industry. In 1963, UTI was established by an Act of Parliament operating under RBI's control until 1978 when IDBI took over. The unit scheme 1964 was its inaugural scheme. By 1988, UTI managed 6,700 crores in assets under management. Phase 2, 1987 to 1993. In 1987, public sector mutual fund emerged, established by banks and insurance giants like LIC and GIC. SBI Mutual Fund was the first non-UTI mutual funds, led the way in June 1987, followed by Can Bank Mutual Fund, Punjab National Bank Mutual Fund, Indian Bank Mutual Fund, Bank of India and Bank of Baroda Mutual Fund. LIC launched its mutual fund in June 1989 and GIC in December 1990. By 1993, the industry managed assets worth more than 47,000 crores. Phase 3, 1993 to 2003. SEBI was established in 1992 to safeguard investors' interest. From 1993 to 2003, private sector mutual funds entered the Indian market, offering investors more choices. Kothari Pioneer became the first private sector mutual fund in 1993. The number of mutual funds grew with foreign sponsors joining. By January 2003, there were 33 mutual funds with a total AUM of 1,21,805 crores. Phase 4. Since February 2003 to April 2014. In April 2003, UTI split into SUUTI and UTI mutual funds, marking the 4th phase of mutual funds and consolidation. The 2009 global financial crisis shook investors' confidence, worsened by SEBI removing inflow load. The industry struggled for over 2 years with slow growth in AUM from 2010 to 2013. Since May 2014, mutual funds have been growing, especially in smaller cities. In 2012, SEBI made some changes to help the industry grow more. By January 2024, the money invested in mutual funds went up to 52.74 trillion rupees from 10 trillion rupees in 2014. The number of investors' accounts also went up from 8.10 crores to 16.96 crores. This growth happened because the rules made by SEBI and help from people who sell mutual funds. These people help investors choose the right fund and stick with their investments even when the market is not doing well. They also made SIP popular with 7.92 crore account by January 2024. Mutual funds have played a crucial role in wealth creation and financial inclusion. As India progresses economically, mutual funds continue to evolve, offering avenues for investors to participate in the nation's growth story. Investment in securities market are subject to market risk. Read all the related documents carefully before investing. For more information, visit kuvera.in.